Hi everyone, this is Tony Kurec from REMAX Ultimate Real Estate here in Toronto, and today we're going to be talking about mortgages. I've had a few calls from several of my clients, and they've had various mortgage questions. So I thought I'd pose those questions to one of my favorite mortgage brokers, Lois Volk of Invis. Hi Lois, thanks for joining us today.
Hi Tony, thanks.
Great. So one of the questions that I've had from one of my clients was that they're looking to renew their mortgage. Their current mortgage is coming up for renewal at the end of September, and at that point they asked me about some of their various options, whether they should stay with their current lender or whether they should shop around. So Lois, what would you suggest that they do?
They should definitely shop around. I'd suggest checking with their lenders, seeing what they're offering, and then best way to shop around is to contact me, because I'll check other lenders, offer them the best rates, and possibly take a look at what type of mortgage they have. They may want to consider switching from a fixed to a variable or vice versa. And also, most lenders will take over the mortgage without charging any fees, so there are no legal costs or anything, so it's entirely a free process for the client.
Well, that's great, yeah. So when they come to you, there's no charge that they incur.
No.
You do all the shopping for them.
Exactly.
And you tell them what institutions have various rates, what are the different terms, the conditions of those mortgages.
And I'll help pick the best one to suit their needs.
Great, great. Okay, super. The second set of clients I have are first-time buyers, and they're going to be undertaking the largest single purchase of their lives right now, and that's buying their first property. And I always suggest that, number one, they look at their finances. That's the first step, and in doing so they should always talk with a lender, either their own bank or preferably a mortgage broker who can, like Lois just said, can shop around for them. So Lois, for the first-time buyer clients, what do you recommend they do?
Definitely they should sit down and get a pre-approval, which will tell them how much of a mortgage they can qualify for. And we can also give them a rate guarantee for 120 days, which will protect them from any rate increases in that period of time while they're shopping for a home. What I do when I pre-approve my clients, we get together, sit down usually for about an hour, go through their income situation, their personal budget at the moment, and decide how much they are prepared to spend monthly, and also take a look at how much the bank will qualify them for. In a lot of cases too, they may be interested in considering consolidating some of their debts to bring their other expenses down.
Oh, that's great, yeah. Yeah. I guess with a lot of people, it's human nature almost to have big eyes when you're going into this home buying process, and
yes, and it's frustrating for everybody if they're looking at homes that are beyond what they'll qualify for, and then obviously they're spending a lot of time looking around, and it's a disappointment when they find out they have to be looking at lower priced homes.
Can you help them with their budgeting as well?
Definitely. I'll go through what type of household expenses they're going to have, including property taxes, utility costs, and even maintenance. Annual maintenance on a home has to be taken into account, particularly if it's an older home, and just helps them take a look at how much money they're spending now on essentials, transportation, their children, and also if they are going to have any major expenses, or if they anticipate any major expenses in the next few years, like having children.
Great points, great points. Okay, the third question that we have for you today is one set of my clients are looking to move up. They're currently in a house that's approximately $600,000. They have a mortgage, an existing mortgage of approximately $250,000. And they're looking to move up to a house that's maybe $800,000 or $900,000. What should they do as far as their finances with the existing mortgage and looking at moving up into a new property?
They'll definitely have to check the terms and conditions of their existing mortgage, whether it can be ported, which is often done in that situation, where they keep their existing mortgage, the terms and conditions, and just increase it when they move. They may also want to consider paying that mortgage off, depending how much the penalty might be, especially if rates are lower at the time they're buying, or if they want to switch perhaps from a variable to a fixed rate. So it definitely is good for them to sit down too and take a good look at their future budget needs, and also if the type of mortgage that they currently have is suiting their needs.
So if current rates are slightly lower than what they currently have on their mortgage, then you say that it's possibly more effective to pay off that mortgage, pay the penalty, and take out a new mortgage?
Often it is. It has been recently anyway, because rates have been at an all-time low.
Right.
But
right.
it also depends how much the term is on their mortgage, because the penalties can be quite huge too. So sometimes the penalty will offset switching into a lower rate mortgage.
Right. Great. Well, thank you, Lois. So there you have it. 3 different scenarios. And Lois can be reached at Invis. Her number is here at the bottom of the screen. You can get a hold of her anytime. And likewise myself, Tony Kurec at REMAX Ultimate Realty here in Toronto. So thanks for now, and keep in touch.